Very good afternoon to everyone. We are very excited to have this webinar. We recently have a free zone guide which has been issued by FTA, and then we're going to be talking through some of the key highlights of this guide. Although we're not going to be able to cover everything which is mentioned in this guide, but we will try our best to cover all the main aspects of the guide. I think if you look at the overall guide, so there are two key things which stand out. One is the substance and the other one is ancillary. And my colleagues will be talking through in details some of these key highlights and key changes which has happened. As a quick introductions, my name is Arslan Mushtaq. I am the partner tax at athGADLANG. And I'm going to be joined by my very presenters. Is going to be Suhail and Furqan, who's going to be talking through the details behind all the key aspects. And then we also have Rahul on our webinar, who's going to be managing the entire webinar. And just as an administrative point, if you guys have any questions, then please make sure that you put them in Q&A section below. And we will be picking up these questions at a later date in the Q&A section. Hopefully, we should be able to answer all of your questions while we're going through the details. But if there is any questions which are still not answered, then we will try to pick them up in the Q&A section. And if we are out of time, then we will pick them up later and we'll try to get back to you guys with the details. Rahul, can you go to the agenda? So today, what we're going to do is we're just going to have a quick overview of this new free zone guide and what are the tax rules and how these have been explained in the guide. We're going to do that. Then we're going to dive into how free zone entities can actually avail a 0% tax exemption and what are the key requirements which they still have to comply, etc. And then just a couple of things where people are making any mistakes, which probably can cost them at a later date. And then we're going to have a Q&A session at a later date. So, Rahul, can you go to next slide? Okay, so just to give you overview in terms of free zone, how it has evolved over a period of time. So in December 2022, that's when we had the law, which was published at that time. And then later on in June 23, the Ministerial Decision 139 was issued, in which the concept of qualifying income and qualifying activities was introduced. And subsequent to that, then it has gone into a public consultation document where a lot of people in the free zones have given the feedback to FTA. And some of which you can actually see has then been taken into account, and hence the ministerial decisions have actually changed subsequently. And now there is a guide which has been issued by FTA. So this is the entire journey of the free zones, given it's a very key area from an economy and from the business's perspective, and people were still not sure during the journey that how entirely it's going to actually happen. And now the guide is actually explaining a lot of the ambiguities and a lot of things which are just explained for people to have a better understanding how the rules actually going to be applied in practice. And hopefully then by the end of this webinar, you will have a better idea in terms of how the old reliefs and the free zone guides is covering. So Rahul, can you go to the next slide? So I'm just going to quickly touch upon the conditions which are there. These conditions were there as well. So I think I'm quickly going to cover those through. So I think a company, a qualifying free zone person, it needs to be in the free zone. It needs to derive qualifying income from the qualifying activities. They not to have elected for paying corporate tax at 9%. And they also need to maintain adequate substance in the free zone. This is a very important point, and there is a detail which has been provided in this guide, which we're going to be covering later on. Exactly what does this mean, and what companies have to do. And then you also have your arm's length principle and maintain transfer pricing documentation. So that's already there. And apart from that, you still have a de minimis requirement, which you need to fulfill. And also you need to have your audited financial statements ready for each tax year. So these are the main conditions which are there in the relief, and there is no change in them. And then now we're going to be going into the details of some of these conditions so that you understand them in detail. So now I'm going to transfer it across to Suhail, who's going to talk us through the next slides. So over to you, Suhail.
Thank you, Arslan sir. Rahul, over to the next slide, please. So let's talk about person eligible for free zone release. First thing first, we need to understand that how we are going to claim the 0% benefit. The first thing which comes into mind and the confusion which arises is what is qualifying activity, what is excluded activity, and how we are able to claim the free zone status. But before coming to that, we need to understand that free zone status is not applicable to a natural person, an incorporated partnership, and a sole establishment. So only a free zone company is eligible for a 0% corporate tax rate. Again, going with my experience, many of the clients ask that I am a free zone company, I don't have to pay any corporate tax, and I even don't need to register it. So this is the wrong thing which is going on. So you need to understand, even if you are a free zone company, you need to register yourself for corporate tax. And for claiming 0% benefits, you need to follow the conditions which already is mentioned by Arslan sir, and which would be covered by us in a detailed manner in the next slides. First thing is that free zone, if you are not electing, that you would be paying the corporate tax at 9%, then you get a free zone status of 0%, which is automatically. But you need to understand, I'm going by the practical experiences which I've been facing in the market right now. What happens is people feel that we would be having a profit below 375,000 dirhams. So what we would do is that even if we don't satisfy the free zone conditions, we would elect to pay at 9% corporate tax and take the benefit of 375,000 dirhams. But what would happen in that case is that you would lose the status of free zone, not only for that year, but next 4 years. So total of 5 years. This is the thing which you need to take care before going for the election or not. And for if you are confident enough that you are following all the conditions of free zone, then it's better that you take a status of 0% corporate tax. Now coming to the conditions, first thing first, let me simplify it for you. If you are a free zone person giving a service to another free zone person, what you need to see is that you don't do an excluded activity. This is what you need to see, and apart from that, you need to see the immovable property and that conditions which we'll cover later. If you are a free zone person giving services to a non-free zone person, then you need to see only qualifying activity list. That if your activity is a qualifying activity, then only you would be able to claim a benefit of a free zone status. So this is first thing which comes into mind, that from where I am deriving the income. So this is the important point we need to take care of. Then if I'm talking about from where I'm deriving the income, the another important point which comes into my mind is a beneficial recipient. Now, what is beneficial recipient? It is a very important term and you need to take care of it very properly. You need to analyze it very properly. If you don't do it, then there are chances that you are not fulfilling the condition. The beneficial recipient is a person who enjoys the right to use their services or goods. Let me clear it by one example. For an example, my company is a management consultant company in a free zone, and I am giving a service to another client in free zone, a kind of a audit service or a tax consulting service. So I am deriving the revenue from another free zone person. Here I don't have to see a qualifying activity, but I need to see that my services is not in excluded activity. So it is not. So my income becomes qualifying income, and the beneficial recipient is also a free zone. So beneficial recipient becomes important. For an example, I am giving a service. I am getting a revenue from a free zone company, but the beneficial recipient is someone else, then this creates a problem. Now coming to, I was giving an example of goods. Now coming to goods, let's talk about one thing. For an example, that the beneficial recipient of the goods I sold to a free zone person is a third party. Then how would I come to know who is the beneficial recipient? The safe thing is that get a declaration from the person from whom you are deriving the income. So this would be a beneficial recipient point becomes very important and it's subject to analysis and we need to take care of this. Coming to other points which are directly not calculated in de minimis, which would be covered by Furqan later, which is related to qualifying immovable property as well as intellectual property and other de minimis points. Next slide, please. So these are the list of some qualifying activities. I would be covering main points and giving you the examples to make it easy. Covering the whole list would be not possible given the time frame which we have. But let me highlight some important points. For an example, let's take the first activity, which is a manufacturing of goods. Now, when I talk about manufacturing of goods, we know what is manufacturing. But what comes into mind and what important over here is an ancillary activity. For an example, if I am manufacturing a TV, a television, or a mobile phone, then what happens about the packing? Now, the packing is an ancillary activity, and without packing, I cannot sell the mobile phone. Then this ancillary activity is also covered as a qualifying activity. So this we need to analyze case to case basis whether the ancillary activity part is covered in determining whether we are determining whatever revenue which we are earning is a qualifying revenue or not. Coming to other point, which is a very important point, which was covered in the decision as well, and now it has been elaborated, is the trading of qualifying commodities. When I talk about trading of qualifying commodities, this trading can be done from any free zone. Rest distribution activity can be done from only designated zone, which would be coming in next slides. But talking about qualifying commodities includes metals, minerals, energy, and agriculture commodities traded on recognized stock exchange. It's not necessary that recognized stock exchange you see only of UAE. You can also see any other stock exchange and you can just take out that what are the qualifying commodities. And if you are trading in a qualifying commodities, you can still, it's a qualifying activity. So you can claim the benefit of 0% corporate tax subject to all other conditions are fulfilled in the free zone. Another important point is holding of shares. Now, what happens in holding of shares is the important point which comes into my mind is the substance requirement. If you are holding the shares, it means that you don't need any employees over there. But what important example which has been given in the guide is that when you are doing this activity, then you need to take care that the board meeting is done in a free zone. So when we talk about board meeting done in a free zone, then even an online meeting done somewhere else would not be covered. So board meeting minutes, a proper documentation to prove the substance becomes necessary. Next slide, please, Rahul. Coming to this slide, I would be covering reinsurance service. Now, as you will go through the list of excluded activities, the activities uh, is there of insurance, but it's about insurance and this is reinsurance. So if you talk about reinsurance activity, then this is covered as a qualifying activity. Coming to another important part is headquarter services to related party. So if the headquarter services is given from a free zone, and if we are fulfilling all the conditions related to it, you need to analyze that what you are considering as a headquarter service is covered in as per the definition of headquarter service or not. So the analysis of this headquarter services becomes very important, and then you can uh, verify that whether this activity as per your analysis is a qualifying activity, and you can claim a 0% corporate tax rate on that. Next slide, please. When it comes to financing and leasing of aircraft, it's related to, I think it's not related to each and every business over here, but it is still given in a qualifying activity because it's related to the main thing, which is that uh, it is related to the main business which happens through the free zone. That's why it is covered in a qualifying activity. Coming to it again, the same thing that if you prove it that this is a qualifying activity and subject to other conditions, this would be also subject to 0% corporate tax rate. Next point, please. Now, this is very important, and this is what is going on in the market. That is distribution of goods or materials in or from designated zone. Now, what happens is that this distribution activity was creating a lots of confusion, and thanks to the this guide which is present now, we can consider that high C sale is also. We were already advising our clients that high C sales is part of a qualifying activity if done from a designated zone. Now, what we await here is that what is the list of designated zone. Still, it's better to approach your free zone in which you are doing business and ask the free zone authorities whether this would be covered and whether this zone is getting as a designated zone and benefit of corporate tax we are getting or not. Now, coming to distribution activity, it means that your activity needs to be done from a designated zone. So if you are purchasing goods from outside UAE and you are selling goods outside UAE and you are booking income over here, which is also called high C sales, this activity, if done from a designated zone, you would be able to claim a 0% corporate tax benefit subject to other conditions such as important conditions like substance and transfer pricing requirements and everything. In next slide, I would be running you down through few examples of distribution activity. Rahul, over to next slide, please. Now let's see the example. Manufacturer is in country A. Company C is a designated zone, which is, you can say in UAE, a designated zone. And we are selling the goods to country B. Now what happens over here? I am purchasing from country A and selling it to country B. Goods are not entering UAE. But because I am doing this activity from a designated free zone, this becomes a qualifying activity. Next slide, please. Now coming back to another example. Next slide, Rahul, yeah, please. Thank you. Now coming back to another example. My company is a company D in a designated zone. Manufacturer is in country A. I purchased the goods, brought in the goods in UAE. Now I'm selling it to an end user, to a business in UAE, but that user is not an end user. Now we need to take care of this. It means that you need to do a B2B sale. This is again a qualifying activity because the activity has been done from a designated free zone. That's why this becomes a qualifying activity. I've purchased the goods from another country. I've brought in the goods in a designated zone and sold the goods in UAE. But still, it would be a qualifying activity. Next, please. Now, for an example, a manufacturer is in UAE. I am the company in a designated zone and I am selling these goods outside UAE. Again, as the activity is done from a designated zone, it is deemed that I have been carrying, the company E is carrying out the activity from a designated zone. So it is a qualifying activity. Next, please. So covering the excluded activities, I'll just run you down through few of the things. Any transactions done with natural person would become excluded activity, but few of the transactions are allowed to be done with natural persons, which include wealth and investment management services, fund management services, ownership, management and operation of ships, financing and leasing of aircrafts. These are excluded if done with natural persons. The rest all becomes any, you can say a B2C activity becomes a excluded activity. Other activities are banking activities, insurance activities, as I was already covering, reinsurance, finance and leasing activities. Next, ownership and exploitation of immobile property. Here, there is an important point which we need to consider. Commercial property located in a free zone where transaction in respect of such commercial property is conducted with other free zone is a qualifying, is you can consider it as not covered in excluded activity. Why it is so? Because it is treated by a separate provision of the free zone, and that's why, and any other property irrespective of this, you can say a residential property or such, this would be covered in an excluded activity. Next, please. So here, as I was discussing the qualifying activities is the first part. I discuss ancillary activities, I discuss beneficial recipient. These are some important parts. This is the only a one condition which you are satisfying. To get a corporate tax 0% benefit as already covered by Arslan sir, maintaining a adequate substance, de minimis requirements, audit, TP requirements are important. I would request my friend Mr. Furqan to continue about substance in detail. Thank you.
Thank you, Suhail. Thank you, Suhail, for such a detailed discussion. I will be discussing about the two important conditions, which are adequate substance in free zone, and the other is the de minimis requirement. So the main condition to attain adequate substance in free zone is to have core income generating activities in free zone. Now, what are the core income generating activities? Core income generating activities are the activities that are essential and value adding activities to generate revenue. All these core income generating activities need to be done within the free zone, or if the activities are of distribution activities, then they need to be within the designated free zone. We only have one exception to this rule, that is, we can outsource the qualifying intellectual property income to any person outside the free zone. So any income from ownership or exploitation of any intellectual property which we have outsourced to any person outside the free zone, that will also be deemed to be done in free zone, and we will be maintaining the adequate substance in free zone with respect to such activity. Coming to non-core core income generating activities, we have some examples for that. For example, for a manufacturing concern, non-core income generating activities may be facility management services, waste management services, procurement services, and quality control services, research services. In facility management services, we can have building maintenance services, security services, and janitorial services, etc. So these are all non-core income generating activities. These activities can be performed outside free zone or can be outsourced to any person outside free zone. So non-core activities, non-core income generating activities are those activities which do not directly drive sales or that are routine in nature, like the activities which I just mentioned. We can have a couple of examples here. First example, we can have an activity of distribution where our warehouse and repackaging facility is in designated zone. Our registered office and employees are not in designated free zone, but in other free zone. Our core distribution activities are also in a free zone, but not in designated free zone. So since our registered office is not in designated free zone or core distribution activities are not in designated free zone, here we will not meet adequate substance requirement. But in example 2, if our activity of distribution is in designated zone, warehouse is also in designated zone, or core activities are also in designated zone, registered office is also in designated zone, and even if our most of the employees are out of designated zone and they are doing non-core income generating activities, even then this business will be deemed to be maintaining the adequate substance within the designated zone. Rahul, please, next slide. So to maintain adequate substance in free zone, what a free zone person have to do? The free zone person have to maintain adequate assets. He have to employ qualified full-time employees, and he also have to incur adequate amount of operating expenditures. And to assess the adequate substance in a free zone, the person need to do 3 things. He first need to identify his core income generating activities. He may be performing various activities to run his business, but some of his activities need to be core income generating activities. After identification of his core income generating activities, he then need to identify his assets, employees, and operational costs which are associated with his core income generating activities. And in third step, he need to evaluate the consistency between the above 2. He need to evaluate whether his assets, employees, and operational costs are in consistency or are consistent with nature, size, revenue of the activity which he is being performed. So if it is consistent and it is as per the revenue of his core income generating activities, then he will be deemed to be maintaining adequate substance in free zone. Next slide, Rahul. And some other consideration which we have to maintain are that any activities through domestic permanent establishment will not be considered for the assessment of adequate substance. For example, if a free zone person have a domestic permanent establishment in mainland, so any activity performed by the mainland will not be considered as core income generating activity, and all his activities will be ignored to assess the adequate substance. Next, if a qualified free zone person can outsource activities to any person in free zone, provided he has adequate supervision over the outsourced activity. He can also do the activities himself, but at the same time, he can also outsource these activities to any other free zone person, or in case of distribution activities, to any other person which is a designated free zone person. but he should have adequate supervision to any person to whom he has outsourced such activities. Now, how to have adequate supervision, he must have a mechanism and means in place to observe, oversee, assess, instruct, and provide guidance over the deliverables of the service provider in terms of quality, quantity, and timelines. And another thing, he should also have proper appropriate documentation that should be able to demonstrate adequate supervision over the service provider. And the third thing, the actual conduct of the parties should also confirm the contractual arrangement between the parties. The actual conduct of the parties should be also like that they are agent and principal, or the one has outsourced its activities to the other and he has proper supervision over its activities. In case of outsourcing intellectual property activities, any qualified free zone person can outsource its intellectual property activities to any person in the UAE. But if he needs to outsource it outside the UAE, such person should not be any related party. He should be an unrelated party. So if this condition is met, then his income from intellectual property will be deemed to be covering the adequate substance requirement. And next condition, Rahul, please. Next slide. The next and last condition which we will be covering today is the de minimis requirement. De minimis requirement is simply allows a qualified free zone person to earn a marginal income or marginal revenue from other activities to be able to remain under the free zone criteria. But it has some conditions. The main condition is the revenue from non-qualifying activities should not exceed lower of 5% of total revenue or AED 5 million. We will discuss the calculation of total revenue in coming slides, but to be simple, we will have two examples here to clarify this concept. For example, if we have total revenue of AED 200 million, then other revenue should not exceed 85 million, because 5% of 200 million will be 10 million, and that will exceed 85 million. So we will have to take the lower amount. So the threshold will become only 85 million. But if total revenue is 90 million, then in that case, the 5% amount will be 4.5 million, and our threshold will become 4.5 million. Moving on to computation of the de minimis threshold. To compute the de minimis threshold, we first need to segregate the revenue streams into two parts. One is total revenue and the other is non-qualifying revenue. So when we calculate the total revenue and the non-qualifying revenue, then only we can calculate the percentage of non-qualifying revenue, and we will compare it with our threshold of 5%. For the total revenue, there are some revenues which are excluded for the calculation of total revenue for the purpose of de minimis requirement. The revenue attributable to a foreign PE will be excluded from the total revenue. The revenue attributable to a domestic PE similarly will be excluded. The revenue derived from immovable property which is located in a free zone, but the property which is a commercial property and income is through the transaction with a free zone person will not be excluded from the total revenue. This means the following revenue will be excluded from total revenue: the revenue which is derived from non-commercial property located in free zone, the revenue which is derived from commercial property located in free zone, which is transacted with other than free zone person, and the revenue which will be included in total revenue will be immovable property located outside free zone. We have a chart at in the next slide, in the coming slides, which will also summarize these rules. Then coming on to our fourth point about the intellectual property, revenue derived from the ownership or exploitation of intellectual property other than the revenue relating to qualifying IP. This means revenue relating to only non-qualifying IP will be excluded. So after calculating total revenue following these rules, we will calculate our non-qualifying revenue. And for non-qualifying revenue, we will exclude the 3 activities. But before excluding 3 activities, we will adjust these 3 activities from above for above 4 points. Like for excluded activities is if there is any excluded activity which is attributable to a foreign PE or a domestic PE, then from this excluded activity, we will first adjust the revenue attributable to foreign or domestic PE. And then if there is non-qualifying activities with a non-free zone person, this will also be added into the non-qualifying revenue. And if there is a transaction with a free zone person where such free zone person is not the beneficial recipient of the relevant services or goods, in this case also such revenue will be added to non-qualifying revenue. Rahul, please next slide. So this table summarizes the total de minimis rules for calculation of total revenue and non-qualifying revenue. We have also added an extra column at the last, which is qualifying revenue. But we only need to calculate total revenue and non-qualifying revenue to assess the percentage of de minimis requirement. So for domestic or foreign permanent establishment, any revenue will not be included in total revenue, and likewise, this will not also be included in non-qualifying revenue. Revenues from immovable property in the case of commercial property in free zone, in case of transactions with a free zone person, the revenue will be included in total revenue and will not be included in non-qualifying revenue. Similarly, in case of non-commercial property in free zone, the revenue will be excluded and also be excluded from non-qualifying revenue. And in case of revenue from qualifying income from immovable property, this will also be included in total revenue and will be excluded from and will not be included in non-qualifying revenue. With respect to intellectual property, qualifying income from intellectual property, the revenue will be included in total revenue and will not be included in non-qualifying revenue. And with respect to non-qualifying income of intellectual property, then the revenue will be included in total revenue and will not be included in non-qualifying revenue. And likewise, likewise is the case with other sources. So we will share this table for you to assess and use it for your own understanding and for your own applications. So this is all from our side, and we will take if there are any question and answers. So Rahul, please next. Over to you, Rahul.
Thank you so much, everyone. So I think if any of you have any questions, then please feel free to put it in the Q&A section. I hope that you found this information of use, and also it will help you in terms of applying the guide if you are operating from a free zone entity, and then also help you understand what are the conditions which are supposed to be fulfilled by each of the free zone persons. Because if any of the conditions is not met, then you will disqualify for gaining a 0% corporate tax rate. So if we have any questions, then please feel free to put it in the Q&A chat. Otherwise, we'll conclude this webinar.
Sir, we have received one question from a client. He is asking that we are currently registered in the DMCC free zone, and we are dealing in the vegetable oils, derivative, and machinery, and don't have any physical presence in the free zone and are not having any local UAE transactions. So whether they will be eligible for the free zone relief?
Rahul, I would like to answer this question. Going through the question, if you are in a DMCC free zone, first thing which you need to analyze is whether what you are doing the trading comes under commodities or not. If it doesn't come under commodity, then this is not a qualifying activity. If you are doing this activity and it doesn't come under commodity, you need to see that this comes under a distribution activity. And when we talk about a distribution activity, then it needs to be done from a designated. So subject to analysis and subject to further discussions of the transactions and nature, right now what I feel is that a vegetable oil and a machine, you can say, machine would not be covered out and out in a commodity, and DMCC not being a designated zone, this would unfortunately become a non-qualifying kind of a activity.
Thank you, sir, for answering this question. We have received one more question. That person is asking that we have head office in the mainland and we have recently opened a branch in the free zone. So whether we will be able to eligible for the free zone relief? They have not specified what kind of activity they are doing.
Yeah, considering that the activity which they are doing is a qualifying activity and the rules are followed and conditions are maintained, the guide specifically says that a mainland company having a branch in free zone can apply for a 0% corporate tax rate, can have a benefit of 0% corporate tax rate for that related free zone income.
Thank you, sir. We have one more question. The person is asking that they have registered in the mainland as a real estate developer and they have shipped their operation in the free zone and they are developing the properties there and selling them properties. And probably these properties are the commercial properties. So can you answer this question, please?
Commercial, if you are talking about a commercial property, first you need to, if the gentleman is able to disclose that a kind of a property is a whole and sole commercial property or it's a mix of residential and commercial. Because if it's a mix, then there comes a attribution of income and expenses accordingly. So related to a commercial property in that sense, first, if that question is clarified, then we can answer it more properly. If I consider it that this is a commercial property and income is derived from a free zone person, then it can be subject to a 0% corporate tax rate.
Okay, thank you so much, sir. We have one more question. The person is asking that I have restaurant in free zone, so there is any relief related to the restaurant business?
See, frankly speaking, if you're talking about restaurant, then it doesn't come under qualifying activity, first thing. So if I say that if it's in a free zone, then obviously I would be deriving an income from a natural person. If you're deriving an income from a natural person, anyways, it's out of the purview that you would be able to claim a benefit of a 0% corporate tax rate. Because the first condition, which while I was explaining, I mentioned that if you are a free zone person and deriving income from another free zone person, and if you are deriving income from outside free zone person, then qualifying activity. But if you are only doing from you are deriving revenue from free zone only, then you need to see only excluded activity. And when I gave the answer of excluded activity when I was discussing the slide, the first point was a natural person.
Thank you so much, sir. We have one more question. The client is asking that we have distribution business in free zone, but that free zone is not designated free zone. So what to do next? Because law has specified that distribution activity should be conducted through the free zone to avail the relief.
Yeah, distribution activity needs to be done from a designated zone. So, what to do next is a proper planning, a proper cost benefit analysis, and then come to a conclusion whether you would be able to take a benefit of 0% corporate tax rate if you move to designated zone and subject to other conditions. As you know, that law has a stringent conditions about GAR and all the things. So it's subject to analysis. It out and out, a straight answer to that cannot be given.
Right. Sir, I think although we have lots of questions, but there's a pop-up, we are running out of the time. So I will request all the participants to email us or through contact us, then we will be able to answer your question and we will be more than happy to answer all your queries.
Yeah, thank you so much, Rahul. And thank you so much, all the participants, for being active listeners and also asking the questions. But please, like Rahul said, please feel free to get in touch with any one of us if you have any questions and they are still not being answered. And then we'll try our best to get back to you as soon as possible. So now I'm going to conclude this webinar. So thank you so much, and then hope to see you soon on the next webinar. Stay tuned. Thank you.